Hello, squids. It is August 6th, and I'm Samuel McCulloch. I'm here with a freshly cut and groomed DeFi advisor who is on mute for a second. And also, we have a very special guest to help explain what's going on in the market. That's Mr. Captain Rationale, Noah Seidman.
Much pleasure. Much pleasure. Good morning, gentlemen.
How are you doing? So I really enjoyed your tweet the other day, and that's the name of the show today, which is Local Meltdowns, Global Contagion. And we are in full force as markets plummeted over the weekend from a variety of causes, taking the price of Bitcoin from 65,000 all the way down to 50,000 in just a wild swing of events in a type of volatility that we just haven't seen for years.
A lot to unpack and also relative considerations. Suffice it to say, in crypto terms, which I think a lot of our audience is, think of it as Go is maxed out or CRV-USD is maxed out and it's up at 50%. Why? So why would a curve's rate be up that big? It would be up that big because the monetary policy of the system wants to repeg. It wants people to pay back debt. The same would go. The Dow would adjust the interest rate. So that forces an unwinding of a carry. And that's exactly what all leverage is in many regards when you're borrowing a dollar/dollar liability. And that is what is inevitable to play out with the relationship between Japan and the United States, especially as the relative interest rates tighten. A carry trade is only valid when the interest rates, the spread between them are favorable. So if you borrow at 5% and you're yielding 10% because you invested what you borrowed in something, that spread is 5%. But if that spread collapses to 2%, 1%, not only does it invalidate when you're no longer making money, it invalidates because of directionality. So if you're fearful that the spread is going to continue to tighten, you're probably going to be forward looking in the market and say, yeah, I'm probably just going to unwind this. It was nice while it lasted. And that's the big relationship between Japan and the United States. Borrow 0% interest rate at a 0% interest rate in Japan for the last 15 years and give it to the US government at all the way between 2, 3, 4, 5% over the last 2 years in the US. And that's the expansion of the carry trade. But as that interest rate spread contracts, they want to unwind it. But it bleeds over.
Yeah. So I actually, the most surprising thing for me out of all of this was not the market movements of the S&P or the JPY, because, they've been moving. JPY has kind of been in free fall for a couple months now, coming down from 160 to 144. The thing that surprised me the most on Monday was the explosion of the VIX, which is the fear and volatility index, to levels that we've not seen since like 2008. So I'm just going to zoom in on this chart a little bit. The VIX hit a high of 65 during Monday's trading session. And the last two times that it's been there was the COVID meltdown when the entire global economy was shutting down, and then also the 2008 crisis. That is just wild, right? Because, like the market movements on Monday weren't like that crazy. Like you look at the SPX, okay, it had a sell off down 3%. You look at some of the other trading venues, it was, a volatile day, but the VIX is telling us that this was up there with those kind of like world-changing events that rock global markets to such an extreme. And yet here we are, one day forward, everybody's like doing great. Japan was limit up yesterday after the market collapsed. Their best trading day in like 10 years or something like that. S&P's kind of staying where it is as well too. Bitcoin's recovering. So what exactly, like, does this mean anything? This high point for VIX?
Yes. The 65 that occurred back in 2008 is not the same 65 that occurred in 2020, and is very much not the same 65 that just occurred. The market, the system has expanded and continues to expand and will continue to expand into the future, has expanded to such a degree that it's not the same 65. I believe it was probably yesterday, late afternoon, I posted the Dow Jones Industrial Average, and I put a little line next to the insanity over the weekend. And it's not there. There's nothing. It's literally a mean regression. So this 65 pushed us into structurally non-violating positions or circumstances. None of the structure is violated. Everything is still supported by moving averages. Um, the levels, the level, nothing, nothing broke. It was a recalibration of the carry unwind bleeding over into fear in other markets that what if it keeps going? Because obviously we're very familiar in crypto markets with liquidation cascades, and that clearly occurs in TradFi as well, especially in 2008. But that did not occur. And the system was able to accommodate the recalibration, the deleveraging.
Yeah. So just taking a look at the JPY chart, which is kind of the cause of all this, it's had one of its worst months in its history. It's come down from 160, which FX doesn't usually move this much,
No,
right?
this throws everything off. It destabilizes everything. As FX is a relative phenomena, which and what is FX? FX is the flow of capital between markets. So this means basically what we see in this chart, when you see those legs down, is capital is significantly flowing into and out of countries. So it's quite significant.
Yeah. And so I just want to pull up the Bitcoin weekly chart going back. Like the volatility that we've seen, especially over the weekend here, is not completely out of the question. I remember seeing coming into this event that volatility in Bitcoin had been at all-time lows, that it had slowly been cooling off, and people were expecting that with the introduction of the Bitcoin ETF that the days of Bitcoin's volatile past were gone. And yet we sold off almost 20% from the time that Trump spoke, down to 50 in just the span of like almost 2 weeks, less than that.
Happens quick when volatility spikes. It's really a conversation about psychology and contagion. Now, the vast majority of the world is not a rigid slash rigorous investor. They're fragile. So fear is what causes volatility and contagion as well, because fear spreads through contagiously. Um, Clearly, there's no reason to sell Bitcoin or vast majority of crypto as related to an unwind of a Japanese carry trade. The amount of capital in crypto is relatively zero. So this is a phenomena of psychology. Um, Forward-looking, people are thinking to themselves, or at least the larger actors in this microscopic crypto space, and they're positioning that the vast majority of the population will respond to U.S. equity indexes coming down and sell crypto as well.
Is it just that like Bitcoin's on such a far end of the the risk curve that it's so liquid as well too, that, or like liquid and illiquid at the same time, that these types of moves are just the tail wagging the dog here?
Yeah, to understand the crypto space, you don't look at the tail, you look at the dog. That's why it is unambiguously imperative to understand macroeconomics to see where the system is heading. And that's what we've done on my content over the last years to better understand why markets move and the flow of capital between markets. And now crypto space is an emerging market of emerging markets. So that brings up very interesting points.
So where are we heading, Cap?
Yeah.
Where are we heading?
Yeah, you see, yeah.
I think most of the macro folks are spot on. I think the carry trade is like 50% unwound. You do the other 50 and it gets weird in the bond market. And I think volatility seriously spikes in equity markets. But you also have to be very respectful of time. How long do these things take to play out? These are like celestial events. Supernova takes 1,000,000 years to actually first start to blow up, stuff like that. Actually, supernovas take a fraction of a second, I believe. But the point is the transition of stars take a long time. So in market terms, weeks, months, I don't think years, but very long periods of time for these transitions to new market structures to take form. And most of the macroeconomists say very clearly, blow off top and then crash of all crashes, like 1929, everything's blowing up and they don't have control of the system. And that is a very broad stroke to say is quite reasonable, but that is still an entire conversation about what policymakers, because they're clearly very forward looking as well, they see that as well. So what tools do they have in the bag? What are their plans?
Yeah. I mean, I look at the overall market structure. We've had this kind of 40% growth in the money supply since COVID. That kind of tracks with the S&P. Like if you look at the top of where we were versus COVID, we've increased about 50% since then. Look at the chart right here. We're sitting at about 50% higher, which kind of tracks with the increase in the money supply at that point. And
this chart again, Sam?
This is a 5-year chart of the S&P. Back here, you can see where the COVID crash was and the response to it from there. And markets have just kind of been running higher ever since. And especially coming into this past month, we were making all-time highs in the S&P at 5,600, and volatility was quite low for a long time, and yet here we are in reaching what the VIX says is like a catastrophic moment in markets.
Yes.
Yet we're still only trading 5% off the top.
Check back when the VIX spikes to 300 and it makes 2008 look like a firecracker. That's where we're heading with the size of the system.
Yeah. So what does it mean for all the, crypto, Bitcoin, ETH ETFs? We had all this kind of positive momentum coming into this year, and yet here we are, kind of selling off. The ETH chart is especially ugly.
Yes.
It looks almost like an echo bubble at this point. Taking a look at the weekly chart.
Oof. This log looks a little bit better.
Yeah, but yet to reclaim all-time highs from 2022. Now trading 50% off that. And ETFs just came out as well too. So
that's only part of the equation. The ETFs, it's really money supply, because capital wants to get in. It doesn't need the ETFs. That just adds to the capacity for capital flows. But as you can tell, the topic of conversation on most people's minds is volatility. And is it going to go up or is it going to go down? I like to skip over the noise. And to me, that's why I spent so much time understanding how they built these systems, what they constructed. And that tells me where we are and where we're heading in the future. So how do you skip over the middle part is the difficult psychological as well as procedural activity that is very hard to figure out. That's what I primarily talk about nowadays. I know where we're going to be. I don't know how the path is going to be to get there, but the destination is the same because it's a binary destination.
yeah. If I had to look at the ETH chart, I would say that like if I'm just looking at the past couple of months or weeks here, we had recovery coming out of FTX collapse in 2022. That kind of was leading to modest growth in the price coming into the beginning of 2024. Then the Bitcoin ETF was launched. That gave some fuel to the fire. And then early in the year, we had the leaking that there could be an ETH ETF, and that kind of drove ETH to where it was. But looking at the price action now across the weekly chart, it seems like everything is faded, and we've kind of retaken that kind of slow and steady growth that came out of the previous year. It's almost like a reset of expectations now.
By the way, did you see that? I heard that Jump sold a lot of crypto. Is this drop related?
Well, there was a lot of, that coincides with like the short-term movements of what happened, right? So over the weekend, there was a couple of things that kind of threw the markets a wrench. One of them being that Jump was selling off large amounts of its ETH. I believe they sold $500 million worth of ETH during that time period, just in chunks as well too, like just block chunks.
And on the weekend, I saw a tweet saying that they had people working shifts to keep dumping the whole pack during the weekend.
Yeah, it says something when you sell in that size on the weekend publicly as well too.
But why are they selling this? It's a regulatory issue there, end.
Of course, but why on a Sunday? And
can you expand? Can you explain what do you mean that it's a regulatory issue?
Without full knowledge of it, they are changing their business structure, to my understanding. They're historically a market maker, which means basically just either active or just throw your stuff on Curve or Uniswap, because it's easy nowadays. And they know what they want to de-escalate that business activity. Therefore, they don't need these particular assets. Maybe they get into VC, whatever their plan is.
I think there's probably some fallout from 2022 that's catching up to them now. I saw that they were named in several enforcement actions from U.S. regulators, and they're probably closing ranks and shoring up in the face of that. And so, specifically, Jump was involved with Luna and UST, as well as I don't know how deeply they were with FTX, but I know they did have some they were the ones kind of shoring up UST during the collapse, and kind of when the first depeg happened way back when on UST, when it was just at $1 billion, they were the ones who came in and kind of brought the peg back. So I think we'll probably see more information come to light as settlements or enforcement actions come. It's probably going to be a settlement in quite a large amount. that's coming down the pipeline, especially if they're selling their crypto in this size. But that was just one of the catalysts, right? You also had the Iranians, threatening war with Israel over the strikes against Hezbollah leaders over the past weekend. Additionally, there was the tightening of markets due to the increase in Kamala's odds to take the presidency. And I don't know how I feel about it, but Bitcoin becoming like a Trump win prediction market is not like the best. I would prefer that it would be moving in without respect to politics. But I guess you can't have your tea, especially as it becomes larger as well too.
It's very short-term movement as a result of those realities that are going on. But primarily it's money supply that drives all price activity across all markets. If there's 10 times more money supply in the world, these markets will be all up. Every equity index around the world will be up nominally, which means not inflation adjusted. And that's the only thing that is the beacon of sanity in trying to understand why what's going on right now is mostly irrelevant. This price action will drive you nuts trying to understand, is it going to go up or down? It's going to go up and down a lot between now and next week. That is a very confident prediction. Between now and the end of the month, the market's going to go up and down a lot, but none of it matters.
Yeah.
We need better rules, better guidelines and procedures to bring us comfort.
This also really sits with your like the perspective that you share often about on your streams, Cap, which kind of like represents, in my opinion, if I want to like generalize it, the value investing side of crypto assets rather than the growth side of crypto assets. So maybe for those who aren't that familiar with your streams, maybe you can share a little bit about that, maybe even about the little XYZ that you often talk about to get people into like that mindset, because I actually think it's a very different mindset than often people, especially when they get into crypto. They often like, it takes a while till you even know about this kind of stuff, especially when the audience, like myself, I think that I've entered crypto in 2020, often we are people that know nothing about finance in general. So it's kind of related, because at first you only see like the number go up perspectives. You're not aware of anything else.
So if we ignore the numbers, you want to own assets. So that is a very simple premise that is based on, quote unquote, the wealthy. The wealthy own things. So the simplest rationale for a non-investor wanting to become a novice investor is you want to own things. And you need to think of them as a purchase, because what we own is who we are. And if your intent is to sell it, you don't really own it. You're doing trading, you're looking at the numbers. So if you want to own things, probably want to get them cheap and get them at a discount. So that is a simple procedural methodology that persons who want to become novice investors can try and adhere to. Buy things that are interesting as cheap as possible. And that is very consistent with the destination of where we're heading. And if you combine buy things as cheap as possible with the binary reality of the destination, things are either way up or we're all bartering with Immortan Joe in a Mad Max landscape, because that's where things will go if they are unable to prevent a deflationary cascade. The system no longer works. So that's why what I talk about a lot is what is the system? What is money? What is society? How do they construct our populations or our civilizations to organize our populations? what is money is critical to understand to really emotionally digest the binary reality of the destinations.
So in that case, what is money?
Money is a means of rationing natural resources and incentivizing productivity and financing social order. You know what's interesting? Like after a storm, I live in Florida, so it's like you see it. So after a big storm, and so sometimes I remember up in the Northeast we had Hurricane Sandy as well. It's that disruption of normalcy when you wake up in the morning and it's a Monday because it's a work day, but you're coming out of a hurricane. There's no one on the roads, and I draw on this feeling a lot. It's that feeling of you get a chill, a shiver of something's weird, something's changed. The normalcy is disrupted. Money is a construct to preserve and organize that normalcy. It's what gets everyone up to work the same time at the same morning every day, and that creates comfort. So money is something that facilitates uh, people's calmness. They're able to attempt to plan for the future, and that's why everyone's getting frustrated because people have been uh, neutered in their capacity to plan for the future. Because as Lynn Alden talks about, money is broken. And this comes back to like concepts of the social contract. Um, and the better you understand these types of concepts, you're able to transition to the level of a novice investor to strategically manage capital. And I would encourage everyone to write down your procedures, write down rules, which is not only something that's good for investing, it's also good for your understanding of the system, and it will bring you comfort. What to do under what circumstances, planning. It's a lot of broad strokes.
Sam, you're muted. Sam, you're muted.
Oh yeah. So I saw. So what you're saying, Noah, and I believe I saw this from Guart, is that the price of Bitcoin is down because people think that its discounted cash flows are decreasing over time.
Maybe. Yes, but that is probably the case, and because obviously from a ETF standpoint, you buy the ETF and you sell futures.
So I wanted to run through this great tweet that Joel John put out. He runs Decentralized Co. and really had some nice points that I think that we could cover here. Point one was that most alts are probably not going to go back to all-time high, especially not those ones beyond the top 100.
Now, without digging too much into it, I pick up on things that most don't. Alts, stereotype, categorical. Important to understand what is not and what is an alt. But what's most important is most, even the most seasoned crypto folks don't talk about these things as businesses. And that really gives scale and scope and more so context to what we're dealing with here.
Mm-hmm.
It's not alts. We're talking about fintech business. We're talking about banks. We're talking about private credit and foreign exchange markets and derivative markets. That is probably best described as a subcategory of alts.
Also, I think this one's really important is that it's not 2021 anymore. Rate cuts does not mean that everything pumps, especially with where asset prices are now. Like rate cuts would have to go below the previous lows of where they were before people will start to get kind of hot again. Just because
it's just a cringe. It's a cringe point.
Yeah.
But I appreciate the point. It's just there's no macroeconomic context. They cut rates and everything's going to explode. They can't cut rates. The U.S. can't cut rates, and clearly, if Japan raises rates, it's the spread that I mentioned.
Mm-hmm.
if the spread narrows, they're going to unwind the carry trade further. And it's not they, it's you and me. It's banks and people and companies that said, I got I got a $10 billion balance sheet. Hey bank, could I borrow $1 billion in yen? All right, great. Here you go, 0.25%. I'm going to take that billion. I'm going to buy dollars. I'm going to buy 5.5% in the U.S. So there's always, it's important to not be too stereotypical. You need to be stereotypical to understand the structure of the system. But if they cut rates, carry's going to unwind. For the same reason, if CRVUSD is at 50%, you're going to unwind some leverage.
Exactly. Got to pay back that debt, and you do so by selling risk assets, paying back your debt, and then moving into treasuries, into the 10-year.
Which is weird because that's why treasuries in some regard have been moving like they've been moving. It's become an investment vehicle of leverage. It's always been that for a long time, but it's gotten very weird. The leverage and the carry trade is kind of next level right about now.
Yeah. I think the thing that people should focus on coming into like this cycle, outside of Bitcoin and ETH, like the projects worth looking at are those who have cash flows. So, Aave has been one of the big ones. They're turning on the fee switch. Maker's been making cash flows as well too.
They are? It's official that Aave is turning it on?
Yeah, I believe I saw something yesterday that like they're starting discussions on the forums to turn on the fee switch. And there's several other projects as well too, arguably Lido and a few other ones that have pretty good cash flows relative to where asset prices are, especially now with how alts have been selling off.
If Lido turns it on, wow.
Well, Lido already has it turned on. It's mostly about like their perceived growth into the future.
Yeah.
Yeah.
These are the market leaders. If this gentleman's post wants to lump them into alts, there's thousands of alts. Was there a dozen or two actual businesses in the entire crypto space? So the most important thing for a novice investor is to realize most of it is fluff. And what came out of 4 years and all that insanity between 2020 and today is the emergence of a few leading fintech businesses.
Yeah. It definitely. I mean, you look back at the like early days of the NASDAQ, and how many of those companies are still around that were in that first bubble, right?
That maybe more so than ever, more now than ever. That analogy is very meaningful.
Right. Also, like retail's like not really back. I mean, they're back in like meme coins, but they're not really like back in other stuff. And so this leaves like institutional funds, as we've seen flowing into, Bitcoin.
Retail is not back at all, in my opinion.
They're back in meme coins.
That's why Solana ripped and Solana and the airdrop hunting on Cosmos hubs, and that was it. And that bled over into a little bit of a bottom in Ethereum mainnet and its L2s with regard to actual businesses.
Yeah.
But there hasn't been a capital rotation of flows. It's been sucked up by the carry trade. Equity markets are just part of it. Look at how we inspect price to earnings and how inflated these tech equities in that bubble compared to the broader U.S. equity indexes that warrant like, is their business healthy? What kind of debt do they have on their books? So all of that has been put on the side in favor of borrowing 0% yen and investing in QQQ to get 15% for the year on leverage, 5x leverage. So that has it's a very perverted system right now, and I argue a great way to describe the system is it's running on glucose versus a keto diet, but that obviously entails folks understand what the hell a keto diet is and physiology. But I think that is pretty darn accurate on the structure of the system right now.
Yeah. So I think the biggest takeaway from all of this is that market structure has changed, and people should not view the crypto markets or even the broader markets in the same light as they did back in 21 or 22. It's totally different now. We have a completely different set of perceptions, especially at the institutional level, of what's investable and what's not. And this is going to carry into the rest of this year, where we might see Bitcoin continue to rip, continue to do well, and everything just kind of lagging behind, even ETH as well too. So I think the preparation for that is, there is going to be more volatility, but downstream, it's debatable whether those will pick up flows.
They certainly will. Bitcoin is Michael Saylor has that his entire story, and obviously everyone that he talks to sees what his balance sheet's performance is and his business model. The Bitcoin story has become less about the sovereign individual. That's still there, but it's very much the balance sheet of corporations and how you denominate it. It's not only a money-like instrument, because it's almost a cash equivalent, a volatile cash equivalent, but it's also collateralizable. So it facilitates business operations. You could facilitate net 30, net 60, net 90 because people will lend you capital against it. Ethereum is gas. You need Ethereum to engage in financial activity across a variety, especially mainnet, but across a variety of the L2s as well. And that is its narrative. I try my best to break things down to the most fundamental of perspectives that are reasonable.
Yeah.
There'll be divergences between Bitcoin and Ethereum. It's irrelevant. It comes back to what I said when we started. It's own things. What do you own? Who are you?
Own some stable coins.
Well,
I mean, cash. Like, I think like always be ready to buy the dip. Right? Is
well,
but you're right.
that
Noah will tell you, in my opinion, that he sees Bitcoin and ETH as types of cash usually.
Yes. What is a well-structured business? A well-structured business has what it needs to operate, which is cash and investments. You need investments because you need cash flow. And what is the composition of your cash? Composition of cash facilitates credit and purchases. You can make purchases of investments and consumables with credit, which would be financed by your cash flow, and purchases could also be paid for with cash or dollar liabilities as a component of cash. So the best cash, in my opinion, is a healthy, reasonable, that's a very subjective statement, balance between cash equivalents and actual dollar liabilities. Stablecoins, Bitcoin, and Ethereum is the composition of probably the strongest crypto cash portfolio.
Yeah. I think the most surprising thing for me this time around with this set of volatility that we had is at least on the DeFi side, is that none of the big protocols or infrastructure that we have really blew up. Everything kind of worked well and systematically. People were liquidated, billions of dollars liquidated in the span of 24 hours. Yet here we are. And
do you understand what you're saying? Oh my God. Yeah, that is insane. The resiliency of the protocols now. Lindy, they have shown what they're capable of. they're going to iterate from where they are now, yet alone what they've done to get to where they are now. The performance of Aave, the raw base functionality of Uniswap is that what they do. That's a whole conversation what Uniswap is, but Curve and Balancer and all these core businesses and their resiliency are just quite astonishing.
Yeah, and especially like as they grow as well too. I mean, Aave has several billions in TVL now, and it just liquidated really well. Gas prices spiked to incredibly high prices, but markets just chugged on, ate up all the debt, and spit it out. I don't think we even ended up with any like debt issues coming out of this, which is incredible.
This is not Celsius, This is not Celsius.
Yeah.
This is not 2020 and 2021 where you didn't have a core set of trustable businesses to invest in. So as much as so many folks are like, oh, the new stuff, and you get the 10x rip on the volatility and all the degeneracy, that's not where investors go. And who investors, big investors who are deploying capital, real capital, they're not going for 10x's. They're going for 50% or 100% in a year, because in crypto terms, 100% on $100 million investment, oh dear, they don't want 10x's at all.
So there was $341 million worth of liquidations over the weekend, and most of those took place on Aave, where there was $253 million worth of positions that were liquidated. Just an incredible amount. And
you don't need any workers to liquidate it,
Yeah.
Perfect.
Watch your positions, people. Like, I think we got lulled into a low volatility environment where people were thinking, oh, hey, like Bitcoin is, trading at near all-time lows for volatility. Everything's kind of calming down. Bitcoin ETF just means like consistent inflows, which should help dampen volatility. And they kind of forgot that these 10, 20% moves can happen pretty quick, and a lot of liquidations.
What a beautiful protocol. What a capitalist protocol in a world that is changing so much with regard to political interest. It's your money. It was it. Remember J.G. Wentworth? It's your money. Do what you want with it. That's
Who is that?
capitalism. It's stateside back in like the 90s. I think he's still around. But annuities and taking your cash now. So it's your money. That I see the liquidations and I empathize with persons that are liquidated, but that it's your responsibility. And this is the most important activity an individual can do, is to be professional with the management of their capital.
Don't lose it, people.
Don't lose the shit.
Yeah. No, it's also, but it's a very good point, I think, because especially among like small and tiny investors, it's all about, oh, how can I make money? How can I multiple this, multiple that? And you don't even think about like capital preservation, which in a way, when you're a tiny investor, is even more crucial, because like the little you have, you really can't afford often to lose. So it really puts you in a lot of dilemmas. And actually, like you often mention, it's so much of an emotional and mental process about getting to know yourself and what keeps you up at night and what makes you sleep comfortably. And like really, investing really involves so many other aspects that before you start doing it, you really you don't necessarily think about.
Stop trying to make money, people. That is the first way to lose money. You need to think in different terms, because the majority think in terms of making money. And that's your start of your journey of how to think different. And that's why I say own assets. Own them. As in, like, if you bought Bitcoin at 70 grand and it went down to 60, you know how you would say colloquially in the stateside, you would say, own it. You made that choice. And then that's just a catchphrase, but it's also own it, as in like possess it. You should have bought it cheaper. You could have bought it cheaper, and you will likely have a chance to buy it cheaper.
And also when it goes up, like know how to use it and when, according to your own needs.
Methodology.
Yeah.
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 And by the way, touching on another point that you guys brought up earlier, like I think that's kind of the whole point. Like we can want to separate crypto from like politics or other features of life and society, but because money is so deep into it as a social construct, like it always keeps affecting it back and forth. Like it can't really not be political. You know what I mean? Like at some point, it's gonna reach a certain point that things collide. Like you're often put in all kinds of these dilemmas and thoughts, and you just wanted the number to go up, but it's sometimes it's more complex than that.
You know what? Don't hope. Hope and want are relevant in capital management. Own. The numbers will reflect the state of economics that the regulatory authorities create. And that's why the destination is so important. It's a binary destination. It's like weight management. If you're 175 pounds today, you are not going to be 175 pounds tomorrow. You will drink water, you will retain some of it, and so anyway, all the physiological gooiness aside, you're going to be 178 or 170 pounds tomorrow. There's a natural fluctuation to economics, no different. And for the system to continue to exist in its current structure, the amount of capital in the system and collateral in the system needs to significantly increase over time because there is a demand for both. That is the biggest misconception of United States debt. The reason why yields collapse when they do is because there is not enough debt in the system. It's a product, and people are demanding it. And that is the first and foremost job of the Treasury, is to minimize the volatility in the debt market. And cyclically, that volatility collapses. And when the volatility in the debt market collapses, that's when the system has a chance to expand. It's not that the US is expanding the dollar supply. They long lost that ability. That is a manifestation of the system that has created itself. Low collateral volatility, the system expands. High collateral volatility, and people are shitting bricks, and the system is contracting.
Yeah, that's why we're coming back to this VIX number that we started with at the beginning of the show, and why it's so important as kind of a bellwether for broader market movements. Even though we're not seeing complete collapses in the SPX or other U.S. markets, it is a kind of ringing the bell that something is wrong. There is issues in the system. It's just the question of who's going to blow up first, and when is the central banks going to have to step in, and like how do they step in, right? Do they step in after the blow up or before? Like I'm just wondering, like, when do we start to see some of this contagion spread? Because it could be 2-3 months down the road before we start to see some of the larger financial institutions globally start to have issues with this. I mean, you look back to the first rate rise. Silicon Valley Bank didn't happen until 6 months after rates moved as they did. These institutions will do what they can to kind of shore up their balance sheets, but the reaper doesn't come immediately. They do all they can to kind of protect themselves, but at the end of the day, you can't fight the numbers.
So the volatility blows up, the system blows up. It is easier to shore up the system, to do what regulators are programmed to do, when people are panicking, because then they have greater authority and greater justification, and public sentiment is in approval. It's not intervention. This is a completely managed financial system. You all live in a video game, everybody. Pick your favorite sim or game to compare what we live in to. And what they need is political optics. And because they've done a huge amount without the political optics, DTCC and central clearing of treasuries. If you remember when Gensler was talking to that reporter, and the reporter was asking about Bitcoin, and Gensler was talking about treasuries, he was right, because that was indirectly talking about Bitcoin, and think um, institutions or protocols, government protocols like that, where you're centrally clearing treasuries. Oh, circuit breaker. Rates are crashing too quick. Rates are spiking too high. Oh, let's slow it down a little bit. And that is the primary mission of the Treasury, is the volatility. Is the VIX that you saw, is to slow things down so people could process and stop freaking out.
Yeah. I did see a chart the other day that typically if the Fed gets involved after the blowups happen, the market usually responds better. Like if they try to slow roll things before, the major events come, that's when you get into underperforming asset prices.
My 2 cents, look at 2008 and how long it took to recover, then compare it to 2020, and then compare it to Silicon Valley and March of 2023. I would not be surprised to see extraordinary, I don't want to call it intervention. I want to call it market management. I would not be surprised to see extraordinary market management expeditiously, because the system, as it grows larger, becomes more fragile. And it's the house of cards, or the glass house, that everyone goes to have a mental image of the structure of the system.
Yeah, but I wonder if in this, especially in this political environment, if house prices are staying moderately where they are, maybe declining 5 to 10%, and the S&P is not too far off its highs, maybe 10 to 20%, and we start to see more of this bubbling outside the United States, whether there's like political will at that point for any type of U.S. intervention, especially coming into an election season when everybody has eyes on the Fed, and the Fed wants to quote unquote remain independent. And if we start to see meltdowns in, say, Asia or other places because of the unwinding of this carry trade, it things just get thrown into a mess, I think, in this next couple of months, because
yes,
with essentially both sides hyper fixated on rates and what the Fed's doing. Trump doesn't want the Fed making emergency cuts coming into November. Like Trump doesn't want, he kind of just wants the status quo to remain until the election is gone.
That's right? A big word, the status quo. I love that word. And that's big. They will protect the status quo at all costs, because otherwise it's Immortan Joe becomes the Secretary of Treasury. If you haven't watched Mad Max to know who Immortan Joe is, we don't want him as Secretary of Treasury. We like supermarkets and non-chaos, and so at some point the status quo gets riled up. They get frustrated and anxious. And by the status quo, I'm primarily talking about the billionaires and the 100 millionaires. And when they get nervous, the social civility is financed. We mutualize the stability of the system, or the cost associated with the stability of what's required to stabilize the system.
Yeah.
folks talk about like it falling apart and they can't control it. That there's such broad strokes in that statement. Can't control it. What is it? Things falling apart. What are things? At some point, social civility is finance. So Joe doesn't kill his neighbor to get into his refrigerator because he hasn't had work in 6 months.
God forbid, yeah. But that's such an important census. You know, I remember like when I started hearing you say that, because you say that quite often on your streams, I think, that they will always finance social civility. And that's actually such an important point to figure out, because it relates to your point from earlier about the fact that money has a very deep meaning and effect on our lives, whether we are aware of it or not, and we admit it or not. It has such an important part, like it's such an important mechanism to bring order into a society, that that the ones leading a society, no matter who they are, will always want to perpetuate it, because it first of all, like it's been like unstable, threatens them.
Yeah. So I got one more thing I want to talk about, but before we get there, I just want to shout out our sponsors at YieldNest. It is the best place to go and earn some restaking yields with YN ETH. And YN ETH is actually liquid now. There's a curve market for it. You can go to yieldnest.finance and check it out. It's definitely worth seeing. All right.
Real quick, drop the YieldNest into the business product. Which business product is it? FX, credit, or derivatives?
It's a derivative.
That's what exists. Business products.
So I just want to do some political LARPing before we get out of here. There was 3 stories. I googled Bitcoin today, and the top 3 stories that Google was showing me was all about the danger of crypto as a political tool of the right now, which I thought was funny. So here's the Washington Post with the headline: Republicans suddenly love crypto. Americans should be aware. I'm going to come back to this one because this one's kind of the most like milquetoast one. But we also had a reporter from The Intercept who went to the Bitcoin Nashville conference and spent most of her article not actually talking about crypto, but mostly talking about like neo-Nazis and the how Tennessee had turned more red. You know, there's some like.
Where is this article from, by the way? What outlet?
It's from The Intercept.
What's that?
The Intercept is a kind of, I mean, it was started by Glenn Greenwald. He doesn't work there anymore, but they usually talk about like other things than crypto. It's kind of weird to see them writing about this. This person who wrote this is like a justice advocate, but most of the time, you know, she's most of the time they're covering other stuff. They it's not really a political thing, but here they are, you know, talking about crypto and about how Trump showed up and, you know, all the neo-Nazis who were marching through Tennessee, and these people at the Bitcoin conference were like unaware of all of it. So like Trump had arrived in Nashville, was increasingly attracting right-wing extremists who seem to feel too comfortable in the city I call home, right? There's just more of it. It's most of this is just like ranting about how like not Bitcoin, right?
You know, it's the whole this comes back to money and how it brings a society together.
Mm-hmm.
And politics can exacerbate different groups, but what's pertinent is what America is. Everyone could believe what they want to believe, and freedom of speech, freedom of thought, and that was and still is to this day just as meaningful as it was upon inception. And obviously, I get the implied emotional response when I hear this topic, but it's okay. It's not that they're over there. It's about what brings us together, and that's productivity, a nation that's functioning. So this comes back to probably broken money. If money was more effective, this type of sentiment would be less in the forefront, and then it's okay for it to be in the background. Everyone could have their conspiracy theories and their own personal thoughts. But when everyone's got to wake up at 8, 9 o'clock in the morning to go to work, that's more important.
Yeah. The New Yorker also put out an article called Trump's Dangerous Embrace of Bitcoin and the Crypto Bros. This one I tweeted about yesterday. It's essentially just Orange Man bad, so Orange Coin bad. SBF was a fraud and is in jail, and CZ is in jail as well too.
Are they sure that SBF was a Trump supporter?
I mean, he was like Trabuco was the one that was funneling money to the Republicans, and SBF was funneling money to the Dems. So they were just paying everybody off. There's a lot of like Gary Gensler like backing here, and especially in the Washington Post article, which again is the most milquetoast, but I think it has the widest distribution.
Can you repeat the headline though?
Yeah, so the Washington Post one is Republicans suddenly love crypto. Americans should be aware. The cryptocurrency lobby is lining up behind Donald Trump. Voters should see nothing good in this. And essentially says like, crypto is just used by criminals. It's crypto backers are funneling money into the 2024 elections. So there's no value here. Like a lot of like the arguments that you've seen against Bitcoin for the past 10 years kind of all wrapped up into one. I did love this part down here. This right here. So it says, unlike dollars, whose value is anchored in the substantial trust that investors around the world have in the full faith and credit of the United States, the U.S. economy and the Federal Reserve, the value of the tokens relies entirely on what other investors would be willing to pay for them. In this way,
their market.
Yeah. They're a bit like digital baseball cards. And so the price soars and plummets wildly. And so the crypto lobby now supports MAGA to push back against the Biden administration's regulators who have been trying to install some guardrails to protect investors. Gary Gensler, the head of the Securities and Exchange Commission, has proposed that crypto assets be considered securities, subject to the same regulatory constraints covering other securities.
Was this 2020? Oh my God.
Yeah. So, and again, published yesterday. So the SEC has sued some crypto firms such as Coinbase and Ripple for failing to follow basic federal consumer protection guidelines. And they say this is hardly unreasonable because it aims to offer investors in Bitcoin and other tokens similar protections to those that cover other financial products. But the crypto lobby is up in arms.
Oh my God.
And it's not only... yeah.
I'm so in favor of what regulation's supposed to be. The whole point of government is consensus. It's to some degree what we do in crypto, not well, but it's the whole premise of what everyone understands it to be. Have a conversation and do what is reasonable, do what is rational. And you probably should protect people to a degree who can't protect themselves. The only shortcoming of the concept of an SEC is we should, as call it an industry, I call it a market. These types of businesses should say, give me some guidelines. They respond with some guidelines and they institute some guidelines. That it should be a 1 week, 1 month process of how we all come to consensus about what are reasonable protections.
Yeah.
It's insanity. Really, this is all political theater. It's all political optics trying to garner the attention of a bifurcated country of left and right, and that's unfortunate.
Not even only a country, a world. And I think that what you've described, it's like, yeah, that's the point, and like that's the idea, but that's mostly like the theoretical side of politics. The actual side of politics is the more Machiavellian one. Of like whoever's in charge, first of all, needs to stay in charge, and like that's how it really works. You know what I mean? So it always becomes like instead of arguing at the issue and like searching for the truth, it becomes like a partisan thing of who holds the power, because that's like our most one of our most human inclinations, apparently, to just
That goes
try.
back to the beginning of humanity. Who holds the power wants to keep the control. Power of choice.
So I do like this part. Senator Cynthia Lummis came out and said that the U.S. government should buy 5% of the 19.5 million Bitcoins in circulation, without regarding the fact that Satoshi was actually the CIA or NSA.
Yeah, and RFK wants to add like 4 million Bitcoin, and Trump wants some as well. So the US are going to have a lot of Bitcoin.
Well, the US already has 1 million Bitcoin.
I'm sure. By the way,
but I
remember that Trump. Go ahead.
Yeah, no, I just want to cover this like last point that they make in this article, which after throwing some shade at the Bitcoin reserve, saying, "Oh, hey, we could have bought these Bitcoin for only 29 billion last year versus the 63 billion dollars now that it would be worth." They then go on to throw shade at El Salvador, which has bought $100 million worth of Bitcoin, and said that the IMF warned the country about large risks associated with the use of Bitcoin on financial stability, financial integrity, and consumer protection.
Yeah.
Oh.
These people are hypocrites.
This is the editorial board, by the way. This is not like one person. This is the Washington Post editorial board.
It's all the same talking points over and over again. I think an interesting conversation would be around the monetization of Bitcoin. But what is the monetization of Bitcoin? It would cause significant inflation in the Bitcoin price. And I think a very interesting topic, it's a bit of a digression, but it's what is inflation? And that is grossly misunderstood. Trump mentioned that we use Bitcoin to pay the debt. All right. What are the mechanics of things like that? You would have to trigger a huge amount of inflation in the Bitcoin price. Inflation is inflation. So what everyone's hoping for in this bull market of crypto is, by definition, inflation of crypto prices, which is the pricing out of persons that can't afford a particular quantity of cryptocurrency that they want to acquire. It's the same as housing inflation. It's the same as consumer price inflation. Inflation is inflation. So they can monetize Bitcoin, and they could do that with gold as well, which is what a lot of the gold bugs talk about.
I've heard that before. Yeah, they should let the gold price run up to like 20,000 or more, and then
if they do it with Bitcoin, look how much Bitcoin the U.S. government holds, and what they want to assess is how much Bitcoin other foreign nations hold. And I bet you they'd be like, "Oh shit, we should monetize Bitcoin and not gold because we own much more of it."
The U.S. is the largest gold holder, aren't they? They have like,
I believe so.
Yeah, by a lot.
Didn't they like take all the world's gold at some point and kept it?
They bought it.
Like that's what they say. I have no really idea, but I remember they say about these things about like Charles de Gaulle from France, who kind of wanted them to start like paying in gold instead of the dollar. You know what I'm talking about, guys? Like in the 50s or something like that.
France's story is complicated as well, how they've acquired their gold, and but sure.
Yeah, exactly.
Let's just say that the U.S. has. Oh no, that's all African gold.
So here we have the U.S. or the global stockpiles. U.S. has 8,000 metric tons. Germany second, then Italy, France, Russia, China. I guess if we did monetize gold to that effect, it would kind of bail out the EU and the US at the same time.
So that would be an interesting conversation, because it's, what do you monetize in a fiat world? How do you convert to another system? This is the type of conversation to be had when things blow up and they can't get control. It's like, what new structure do they execute? Do they redenominate? How do they redistribute capital, which is basically the redistribution of resources? What do they monetize in the process to convert to a different standard? And then above all is, what is politically what are the political optics that are favorable? What will the general public actually accept as a reasonable course of action? Complicated.
Very complicated. Well, I think we should wrap things up as we're getting kind of deep into time, and we all have other events that we need to wrap up for today. Noah, I really appreciated the discussion that we had, and it was very helpful to understand the wider market at bay. And I hope everybody else listening at home understands a little bit better now as well too.
Hope that helps.
Cap, thanks for coming on.
Yeah,
and an honor to have you on as usual. Thanks a lot, Sam, for hosting.
Mm-hmm.
Thanks for everyone watching.
And shout out again to our sponsors at YieldNest. Before we wrap up, you can find them at YieldNest Finance. We have a bunch of interviews with them on Leviathan, and they're a great team. We like them a lot. And Dio is a often guest of this show. So
an esteemed contributor of Leviathan.
Yeah. So thanks everybody for tuning in, and we will be back tomorrow, I believe. If not tomorrow, then Thursday. So thanks for tuning in.